A good day to all. These days, young generations are worried about their future financial independence, how and what they should do that they can get financially independent, how to kickstart their second income, which way they should do their financial planning that quickly they can become financially independent. But it's not that easy. When you have a small corpus of fund or you have a small funds to start your investments, then of course you need to give some time, wait patiently, do things with discipline. Then only at the end of a certain period you can think that okay, now you are comfortable. So today I'm going to share some key informations which will help you to become financially independent. If we talk about financial independence, okay, you are working on your regular job, you have some earnings, but yeah, simultaneously you need to work on your investment with small funds, whatever is with you, how you can make that fund work independently, where you can create a second income from that fund and appreciation in that invested amount also. This is really tricky, but if you can do things with patience and with a time horizon, then of course you can achieve the target, you can achieve the desired goals. Now what options we have to do the investment? Majorly we see real estate, gold, FD, nowadays equity, but where you can start with the minimum fund. If we talk about gold or if we talk about real estate, these asset class need big funds. With small funds, you cannot start investment in these asset class. Whereas in equity, you have flexibility. In equity, you can start with the small fund. Yes, you heard me right. Our today's session is more about investing in equity, share, stocks, because the fund availability is a constraint. So this asset class will give you flexibility and availability of quality stocks where you can invest and then rely that your investment will grow and make you financially independent after a certain period of time. Take 8 years, 10 years, 12 years. Of course, you need to take a longer period of time, because when you are starting with the small funds, then of course you need to invest time in it. As we know, it's a process. So as early as possible, you need to start. Once the process is started, then of course things will start moving. Your portfolio will start building, churn will start happening, and then slowly and gradually you can accumulate your savings to the investment. In earlier stages, your focus should not be on amount. Whatever amount you have available, you have 2,000, you have 5,000, you have 10,000, means it's all depends. Means with available amount you can start. Try to focus on investing with discipline. Whatever fund you are planning, every month you keep investing without focusing more on the amount or the return what you are getting. For initial 2, 3, 4 years, you just keep investing. Don't worry about the return, what you are getting, what your value became, what the percentage of growth, what's the amount of growth. Just forget about all these things. Just keep investing for 2, 3 years. By investing consistently, what you will do, you are creating multiple opportunities here. You will invest in multiple companies, listed companies, big companies, large cap, mid cap. Maybe they are the leaders of their industry. They know how to do their business and grow their revenue, their profitability. So after investing, all the workings will be done by the top CEO and CFOs of those companies. You have to sit and monitor, okay, what's going on, what are the corporate activities happening, how is the financial, but not more activity you have to do. You just have to monitor. By investing in different sectors, you can invest in textile, you can invest in manufacturing, you can invest in automobile, you can electronics, means you name it, and there are various industries across the board where you can invest and you can multiply your funds. So here all the companies in which you will invest, you will buy their share. It's an opportunity for you. If suppose in 5, 10 years they grow exponentially, you will get the return. Your fund will grow. That's what you want. So patience is the key, as nothing changes overnight. So you need to give time. After that, once you had accumulated some fund, your corpus is ready, then you will see the activities like companies, they are giving dividend, they are giving bonus, they are giving splits. So this will add compounding effect to your portfolio. If suppose you are holding 100 share of some companies and they are giving 1:1 bonus, it means your 100 share will multiply to 200 shares. Same way, if suppose some company is giving a split 2:2 or 1:5, they are different numbers as per management decision, but whatever shares you are holding in numbers, accordingly it will get splitted. So that will add the number of shares. So after, the compounding effect will start. So whenever the price will increase, because you have a double number of shares, so your price will go by double. So this way you will create multiple opportunities by having quality multiple stocks. Now the another factor is dividend. As your number of shares will grow, your dividend income will also grow. So this you can treat as a second income. Whenever, generally 2 times to 3 times, some company even 4 times they give dividend. So whenever they will give a dividend, you will get an additional income. Dividend amount multiplied by number of shares you have. If suppose you have a 500 shares of a company and company is giving 5 rupees of dividend, then automatically you will get 2500. So with time, your second income will also keep increasing. Now it's your choice. You want to reinvest it or you want to use it. If you will reinvest, your corpus will get more bigger. After dividend, there is one corporate action called demerger. Many big conglomerates, what they do, they have many businesses under one umbrella. Suppose they are doing telecom, they are doing petrochemical, they are doing FMCG, they are doing financial services. So they are doing multiple sectors in one company. So once they see the potential, slowly they start demerging. Means from that big companies, one sector, they are making a different company and they are making it listed. So in that way, what happens, whatever number of shares you have, in proportion, you will get that company's share also, which got demerged from the main company and free of cost. So now before you had one company, suppose 200 shares, and if the management decided to demerge and give equivalent like 1:1, then you will get 200 shares free of their telecom industry. So now you have 400 shares. Of course, now that will grow. Now I will take you through one example that how if you take a 15 to 20 years of time frame, then how a share moves price wise and what corporate activities happen in that and how you got benefited from all this. At the end, how much fund you can generate, what is the potential, the opportunity which I was talking about. Like every share you are holding, it's an opportunity for you. So in example, I will show you of Reliance Industries. If we take a time frame of 20 years, in 2005, Reliance share was trading at 55 rupees. So, and if suppose you started slowly accumulating like 100 share per month or even 50 share a month, and in 1 year of time you purchase somewhere around 1000 shares. So the current value that time total was 55,000. So total your investment is 55,000 here. Now you didn't do anything. After initial 1 year, 12 month, 13 month, 15 month, depending on your choice, how much amount you want to invest. You invested one time, so you invested for that period of time. After you didn't invested anything, and you even forgot about it, and then see how without doing anything also your fund will grow. Your 1000 share in 2005, which was costing around 55,000, in 2009 it became 2000 share without doing nothing. How? Because in 2009 Reliance management decided to give bonus 1:1. Means if you are holding 1 shares, you will get 1 more share as a bonus. So if suppose you were having 1000 share, now the current holding became automatically price will change. Same way again in 2017, if you will see, again management decided to give 1:1 bonus. Means if you are holding 1 share, again you will get 1 share as a bonus. So that 2000 share became 4000 now. In 2024, again company decided to give 1:1 bonus. Means if you are holding 1 share, again you will get 1 as a bonus. So here again your total number of share holding became 8000 shares. In this one technical point, what I will tell you, that whatever is the current price, that also gets splitted into 2, and on same ratio I had taken price here. So if you will see the price wise, now in 2025 your current holding is 8000 and the current price which is going on is 1300. So if suppose in 2005 you were holding 1000 share, was costing around 55,000, 1 CR. Of course time you need to give. See, there are only 2 ways to do. Either you invest big money and from that big money you can make even bigger, or if you have a small funds to start with, fund is a constraint, then you need to give a time. Like here, if you give a 20 years of time frame, then easily you can generate a handsome amount. And then the second income which I was talking about, you can see in 2009 till 2009 every year company gives dividend. So 5, 6, 7, 8, 9, they give around 55,000 of they give around 55 rupees of altogether dividend, which comes to 55,000. Again next 6, 7 years they give around 74 rupees of dividend. Every year it comes, sometime it will come 5 rupees, sometime 8 rupees, sometime 9 rupees, sometime 10 rupees, sometime 4 rupees, depends. So I have accumulated all and then showing as a single figure. So if you see your dividend income, that also comes around 6 lakhs here. So this 6 lakhs also, if you want, you can reinvest. That will help you to increase your portfolio. In between, the demerger example I was telling, here you can see in 2024, Reliance demerged its financial services into Jio Financial Services, and they form a separate company. What they did, all the shareholders of Reliance, if suppose in 2024 you were holding 4,000 share of Reliance, that same number of shares you got in Jio Finance also, and that also free of cost without paying anything. Now the current value of that Jio Finance is 2,500. So if you will see that 10 lakh is in that account also. So that's how your fund will grow. You will get dividend, you will get split, you will get bonus if the merger happens. So you have to consider all these factors and then invest. Where are the potential for all these factors? Now I will go through one more example. This is ITC Limited. We know this is also a big conglomerate which operates in FMCG, tobacco, IT, hotels, paper. Means they have many sectors in one company. If suppose in 2005 you were holding 1,000 share, in 10 they give 1:1 of bonus. Means your 1,000 share became 2,000. Now in 2016 they again give bonus of 1:2. Means against your 2 share they will give 1 share. So the total number of share became 3,000. That was in 2016. Now one key thing you can keep in mind, that in 2005 they give bonus, then again they gave in 2010, then again in 2016. So you see the cycle. After how many years, more or less 5 years, 6 years after, they are giving bonus. So from 16, if you will take 6, then 22. So means it's due. Means it's an assumption. Of course, at the end management will decide all this. But yeah, we can anticipate or we can try to see what are the possibility. So if suppose this year or next year, if they give again the bonus, then again your number of share will multiply. And same with the amount, then your corpus will multiply. Again, your dividend will come on the new number. In between, one corporate action, what happened? That ITC Hotels, they demerged their hotel business from the main ITC Limited. What they did, on every 10 shares of ITC Limited, you got 1 share of ITC Hotels. So suppose if you are holding 200 shares of ITC Limited, you got 200 shares of ITC Hotels, and that's free of cost. Today's price is 200, so it means 40,000. This 40,000 you got free of cost without paying anything. Now when the hotel business will flourish, when the revenue growth will happen, when the profitability will improve, then of course this fund will also grow. So that's how explain that each company's share is an opportunity for you that can create a massive wealth for you. Slowly and gradually, patiently, with discipline, keep investing. Okay, fund is a constraint as we talked, but whatever fund is available, you keep investing and don't worry about the amount. Don't even see the amount. Don't focus on the amount. Focus on investing. Of course, you need to make your strategy, how to pick these shares, where to invest, which share to take, what are the fundamentals of the share, that company will last also for 20 years or not. These are the key factors you have to check before investing. You need to go through the financials of the company. You need to check the fundamentals of the company. You need to see the management. What kind of management are there in the company? How is the corporate governance of the company? Are they doing everything well? Are they following all the compliances from the government? With all these factors keeping in mind, you can pick your share where to invest. Now, one critical factor is today's there are many discounting platforms. They will give you app. Maybe they will charge little bit less than normal fund houses like Motilal Oswal. That can be a real asset for you because you need a time to time no. You need a proper guidance, timely guidance. You need somebody to talk, somebody to help you to make your strategy, to understand a professional touch. You need a real finance professional who can take you through your journey of investment and set the tone for your financial independence. If we talk about Motilal Oswal, they give a proper guidance. They have advisory services. So with all these things, you can call anytime. They will help you to pick your shares with the time frame. So all these things will give you extra cushion. You won't get pressure of doing everything of your own. As it says always, do smartly, not hardly. So keep one advisor, same place. You can have a demat account, and together you will get all these additional services there that will help you. Because to make a strong and futuristic portfolio with 5, 10, 20 years of prospect, it's challenging. Alone, maybe so many things. You are a newcomer. You are starting recently. Even if you are following the things, following the news, you have basic knowledge. But still, there are so many components which a professional can advise you in a better way. How to do, when to do, what to do. So keeping all these factors in mind, you can start your investment. If you need some kind of help or support, then you can connect with us also on this. Please don't forget to subscribe the video. That gives us encouragement to make more videos, explore more on the different kind of subjects which can help you. So please watch the video, subscribe the video, like it, share it, and by the time I come with the next video, stay safe, stay healthy. Bye for now.